Personal Finance with Warren Ingram.
So Warren Ingram, personal financial advisor, executive director at Galileo Capital. Did you have a nice time at the Franschhoek Literary Festival?
It was a really wonderful experience. I must say, I've never been to one before, and I felt a little bit like an imposter, thinking my books are hardly classified as anything to do with the literary geniuses that were around. But it was brilliant, and the attendances at the events were really good. And I must say, I felt you weren't too hard on me, which was really great. I appreciate it. Thank you.
I was distracted because we had another person on our panel, so he was your foil, and so he would step in whenever and the best part, by the way, of the Franschhoek Literary Festival, by a long shot, was Warren's university professor who turned up and gave him a hard time. That was fun. That was worth going to. To the festival for. He seems like to have been quite a hard taskmaster at university, Warren. I'm surprised you passed.
I think it was precisely because he gave me a hard time that it forced me to go home and study and be prepared for the next time around, so I could try and take him down, which I never succeeded in doing, I'm afraid. But at least it gave me something to aim at.
There was also a discussion, Boyke Sidney and Simon Dingle's book, which was quite polarizing at the Franschhoek Literary Festival. And it's all about cryptocurrency, of course. You've got devotees and you've got people who wonder what on earth this stuff is all about. And it's a good opportunity for us to sort of look back for the last, year, maybe 2 years. I don't know how far back you want to go. Maybe 2 years perhaps, just to look at cryptocurrencies and to do an assessment of them as a financial advisor, as somebody who I'm sure on a regular basis gets this frightened rabbit in the headlights look from your clients who sit across the table from you and saying, Warren, should I be buying cryptocurrencies?
100% right. And it's an area I've generally avoided talking about on radio because it is so rabid. The debate is it's almost as bad as trying to discuss in America whether you're a Republican or a Democrat. There's no room in the middle for a sensible kind of rational conversation where you look at both sides of the equation. If I come out on air as saying anything that's not 100% positive about cryptos all the time, I get enormous amounts of abuse, and sometimes quite threatening, on social media. And so, from my perspective, when there's no scope for rational debate, it's pointless carrying on. So, at most in the last year or two, I've kind of told people to exercise caution, and not to say that it's a space I think that has no future or no value, in the next decade or so, but just that we have to be humble enough to say we don't know, most of us, what this space is all about, in fact, and how these various coins work and how that ecosystem works. And if you've spent any time with those two gents that you were talking about, you'll realize very quickly that it's a very deep, almost sort of arcane field and very misunderstood. And so you're right that we get lots of questions about it and lots of people asking me what to do. And for me, I always tend to favor the kind of idiot's guide to the galaxy, which is if I don't understand it, I'm going to avoid it. And I don't mind feeling like an idiot sometimes when I kind of stand up and say I don't know, because to me I think I need a fair idea of what I'm going to do with my money and where my money is going to be placed to be able to put a value on something. And if I can't do that, and I need to be humble enough to say I just simply don't understand. It happens often in investing in companies or exchange traded funds, and certainly has applied to every single cryptocurrency investment out there. And to kind of just say I don't know, sometimes puts me up for abuse by people who feel very clever, and especially those that put some money in and made some good money over periods of time, who would point out and say you're a dinosaur, you don't understand, and the world has moved past you. Unfortunately, for a lot of people, it's the recent moves in cryptos has pointed out that there is a lot going on there that people don't understand, especially in the world of these things called stable coins, which I think we need to talk about.
All right, take me through it. Take me through what you do understand from what you have learned. And you would have, I think, learned more than you appreciate that you've learned over time in terms of watching the ebb and flow of what some people swear is the next best thing since tulips.
So let's start with what this looks like to me in terms of parallels in the past and where we are now. The best parallel I can think of is looking at the very late 1990s. We were starting to understand that this internet thing, and especially online businesses, the phrase of the day was e-commerce. E-commerce was going to change the way that business was done. Certainly for retailers, but almost all forms of business, and so we had all these new companies that were listing on the stock exchange, but very often with a business plan and not much else. Just a fabulous website and a hope as to how they were going to sell lots of goods to millions of people around the world. And for a time, these businesses, really exploded in terms of value, did incredibly well. There were sort of new masters of the universe that were taking over the world. Lots of abuse hurled at people like Warren Buffett at the time, who was just standing up saying, "I don't understand how you put billions of dollars valuation on a business simply because it has lots of clicks or lots of views or lots of users, but no revenue." And he was derided as someone who didn't understand the way business was working nowadays. And what happened was that a lot of these early masters of the universe simply faded into nothingness. What we could all see was that the internet would change the way that the world would work, and it would change the way that businesses would do business in the future. How exactly and who would be the winners, I couldn't see. And I feel we're in a very sort of similar space now, where if we look back at that sort of internet boom at the time, most of those companies simply don't exist anymore. And the ones that are really dominant players at the moment, and I always think of Amazon, it was almost nothing at the time. It wasn't a big dominant player, in the early 2000s. It became a dominant player much later. And I think we're in the same space now. We can look at this sort of this crypto universe, and I think it's much wider than just simply coins. That people want to kind of speculate on the price of a coin rising or falling. I think there is an ecosystem which is being built, and the current sort of jargon for that is decentralized finance, where lots of people are trying to take the power and control away from big banks that dominate and feel, lots of people feel that the banks charge too much, are hugely inefficient, and not very business and consumer friendly. And I think there is some justified anger in that. But this sort of world of decentralized finance says we take it away from the control from big banks, and more to the point, potentially central banks as well, because we don't want our futures dictated by central banks who behave badly. And so, people want to exert control over their own futures. And the technology behind this is cryptography, which is in theory, impossible to hack, impossible to for fraud to happen, because the whole world can see what's going on, because the cryptography is there for thousands and thousands of computers around the world to verify what's going on. All of that sounds amazing to me. All of it sounds very promising in terms of a new way of doing business much more quickly. But what's always bothered me is that I think the early starters in this industry might not be the ones that will prove to be great investments. And I think that we might be seeing that now. Because
that's the point. Just because you are wondering whether or not Bitcoin has a future doesn't mean that you are a Luddite who doesn't accept that the blockchain may be useful one day, may be wonderful one day. I don't think about the internet at all when I use it, and I probably wouldn't think about the blockchain for a moment when I used it. It will just become possibly a standard of the future in terms of how transactions are done. And that's great. It's absolutely brilliant. The more reliable, the safer, the more secure, the more trustworthy and reliable, the better. But it's just this, I'm often overwhelmed by the zealousness with which the devotees of crypto come out, both barrels firing, sometimes almost literally.
And I feel what's happening there is that there are some people that are fundamentalists. They fundamentally believe the whole kind of modern system doesn't favor the little man. It favors the titans of Wall Street and a few very wealthy individuals and families, and the rest of everybody else is not winning at all. Everyone's just running as hard as they can simply to stand still, and so those fundamentalists are often not the people that are trading large volumes of coins and large value here. These are people that hold these coins as a way of trying to kind of create this new system. But there are individuals, companies, and hedge funds, I think, that use social media as a way of driving prices up, because they're coming in with only one goal, which is to make money for themselves only, and they will be doing it in the crypto space, or they were doing it in the crypto space up until a few days ago, and for them, they are solely dependent on the price rising. So what they will do is they will come out all guns blazing at anybody that questions the business model or the investor case, because it poses a direct threat to their self-interest. And I feel that that's where a lot of this venom has kind of arisen, is certain people tagging onto understandable anger that the system doesn't work for everybody, but unfortunately, a lot of the people that are benefiting from this and are in fact purely mercenary in their actions are those that are part of the system. Those that are using the kind of naivety to work in their favor, and that's causing huge damage in the last few days.
So I'm sitting wide-eyed across the table from you saying, Warren, should I be investing in cryptocurrency? Your one-word answer is yes or no.
No, I think if you are, allocate maximum of 1 to maybe 5% of your assets, and certainly only money that you can afford to literally throw away.
There we go. I think that's clear. In a moment, I'll be asking Warren a question from Daniel Gausch, who is PR Eng Civil. He's a civil engineer. And you know that because instead of putting MBA after his title, he's put civil engineer, which is great, Daniel. Thank you for your question. Regarding a rainy day fund, you've often mentioned it's a good idea to save 3 to 4 months worth of expenses in a money market account for unforeseen financial shocks. But with interest rates on the rise, I was wondering if I might not be better placed to store that amount in my FlexiBond home loan account and save on the interest there. Which would you prefer? I think that's a great question. Bit of breaking news this evening. Aki Anastasio sent me a note to alert me to this fact, and I see that it has been confirmed and has been run by Tech Central's Duncan MacLeod, that the Mustech founder and chief executive, a legendary figure in South Africa's technology industry, a guy called David Kahn, has died. And he was 62 years old. He founded Mustech in 1987. He moved from Taiwan to South Africa, and according to Duncan MacLeod, I didn't ever have the privilege of meeting David Kahn, but he was a well-respected businessman, enormous sense of humor, says Duncan MacLeod, and he led the development of the country's first ever PC assembly plant, building Mustech into an 8 billion rand revenue business with a profit last year of nearly 300 million rand. No details on what happened, but certainly a sudden death of the founder and chief executive of Mustech in South Africa, David Kahn.
The Money Show.
Personal finance with Warren Ingram.
So, Warren, Daniel's question this evening, do you need to put your money into a special interest-bearing account, so 3 or 4 months worth of expenses as your emergency fund, or can you simply stick it into your home loan on the basis that you can access that money in an emergency should you need to do so? And should emergency never occur, well, you've been paying less interest over an extended period of time, and that surely is a win.
It's an absolute win. I think it's a brilliant way of building up that emergency fund. And just to explain the logic, there is, you might earn 4 or 5% interest on a money market account, or some kind of a special access account where you just store the money and earn interest and hoping that you never need to use it. But if you've got a home loan, you might well be paying somewhere around 8% on that home loan at the moment. So if you can put extra money into that and save yourself the 8% interest, that's a big jump. And the other kind of interesting way of looking at this is that saving is obviously tax-free because you're not earning interest, you're simply saving it. You're saving having to pay that to the bank on a monthly basis. But that compares very favorably to the 4 or 5%, which might well be attracting you taxable interest as well. So you might end up, saying, well, gee, I'm getting 5% interest a year on my emergency fund, but actually you're not because you're giving away a third of that to SARS for the privilege of having that interest. So I think if you've got a home loan and the money is kind of accessible within a day or two, and that's an important thing just to check before you go and put that extra money in, then by all means, I think it's a great place to store your emergency fund. Just make sure that you are financially disciplined, that you're not drawing that money out and spending it on other things. It is there for emergencies only.
And also, just understand the terms and conditions of your mortgage, because I think a lot of mortgages, as they get closer to the end of their term, your ability to draw down on those mortgages is restricted. You think you treat it like your money, but the bank treats it like its money because it has a debt which is owed to it, and it doesn't want you 19 years into a 20-year mortgage term to be suddenly drawing R1 million a year out of that mortgage because suddenly you feel like you need a little bit of cash flow. They are going to get a little bit sticky at that point, aren't they?
Absolutely, and I think it's always worth before you start this exercise, confirming with the bank what the terms are in terms of how much money you can put in there, and more importantly, how much you can draw out if you need that money, and how quickly, how long it will take, and whether there are any fees or penalties attached to that. Most of the time, home loans nowadays are relatively flexible. As you say, be very careful if you're a year or two away from maturity of that bond. But if it's early in the life of the bond, then you should have the flexibility. But don't assume it. You have to check because this is your emergency fund. You're going to need this money when things have gone horribly wrong, and that's not the time to start finding out about terms and conditions.
Absolutely right. So, Daniel, brilliant idea. Absolutely right, particularly with interest rates going up. You don't want to be sitting with a huge liability in your mortgage bond. You want to be keeping that as low as possible and only drawing on that cash in desperate circumstances. Treat it like the emergency fund and you'll be absolutely fine. A good question for today, I suppose, is what is the repo rate? We've got this weird thing where there's a repo rate and a prime rate, and then some people get a discount on the prime rate, and other people get to have to pay more than the prime rate if the bank thinks that there's too much risk in lending the money. What is the repo rate, and why does it exist, Warren?
The repo rate really matters because it's the rate that the South African Reserve Bank charges the commercial banks when they borrow money from the Reserve Bank. So it's maybe not well known, but that's what happens in our country. That a lot of the time the commercial banks won't keep all of the money that they need, in their own vaults. That they will rely on the Reserve Bank to lend the money from time to time, very often at very short notice, to cover their liquidity requirements as well. So when the Reserve Bank adjusts their interest rate, it has a huge impact on everybody else because it means that the banks are going to pay a higher interest rate. So as of today, for example, when the Reserve Bank says we're pushing up interest rates by 0.5%, what they're saying is we're pushing up the repo rate by 0.5%, and that means from tomorrow banks are going to have to pay 0.5% more per year. It's now going to be a level of 4.75% a year, but they're going to have to pay that when they borrow money from us, and immediately what happens thereafter is that people like you and me, Bruce, we're not able to borrow money from the Reserve Bank. We're going to borrow it from the commercial banks, and they're going to be charging us that extra 0.5% as well because they're not a charity, and they're going to keep their margins. And if you contrast that repo rate at 4.75, compare that to the interest rates that most of us would be charged, which is prime, and that's at 8.25, for example, at the moment. And then we see where the banks are making the money. It's that difference between the repo rate and the prime rate.
Thank you, Warren Ingram, Galileo Capital this evening with Personal Finance. Warren Ingram is a director at Galileo Capital. He's a personal financial advisor.